Good morning, everybody. Welcome to Stockradar Stocks in the Move for another week. Today's date is the 26th to the 4th of April 24. My name is Richard Lee and I'm a stockradar.com.au website for you. Okay, we're now having the correction that we had to have, which is always what's going to happen. We always get corrections to markets go up, and our market's gone up quite a way, as is the US market, so we're having a correction at the moment, which is fine. So we're going to look at that today, look at that situation. We're going to stay cool, stay calm, let's see where our stops are, and just behave in a fairly normal sort of way. Okay, so yesterday was Anzac Day, so we had a holiday, so we're here today, Friday, for the video. Positives this week, well, the correction has allowed us to lock in some profits, which we did reduce some exposure last week, but quite a bit. We took some stocks out, especially some things like some builders, Boral, James Hardie, Reliance World. Well, it's in pretty good profit, so we're just taking a bit off the table, locked in some profits, and step aside for some of those stocks there. Still holding many, but for the moment we've just locked in a few there. Those stocks have been triggered by predetermined stops. Okay, so these stops were set a while ago before the market happened. So this is how it works. We don't have to make a decision on the run. When corrections come, we don't panic, we don't do anything. We just let our stops go, and if they go off, we hit them, we execute them. If they don't, we stay with them. Okay, so that's the situation there. I'll talk about it a little bit more today as we go through. So here we've got the top 10 here, a little bit of a mixed bunch. As you see, the gold miners have come off a little bit after a little bit of a pullback on gold there. We've got a mixed bunch of uranium, golds, computer shares in there, energy, Orica's in there. So it's a bit of a mixed bunch there. And you can see Orica over there in the chart. Its trend intensity rating is +9. It's been performing quite well. It's been a laggard for a while, struggling. And you can see a couple of those tops up there. It failed, came back. But each time we've got a bit of an uptrend developing here. So eventually we get that break, which has just started to happen. And we're seeing some fairly good support for the stock Orica at the moment. So that's a pretty good one for us at the moment. So there's the top 10 at the moment. Our stock pick count, as I say, has come down from 78, 69 this week. So we locked in, we took out 9 stocks, locked in profits on most of those. So we're down to 51 stocks. So we've had a bit of a drop, about 15% on our stock pick count, which is a little bit of sudden. But anyway, that's what happens. So we just played as it comes, but it has dropped off a little bit there. So again, the stocks that are running well, but there's a lot of stocks that aren't doing very well at all, as we know, whether it be the Sonic Hells of this world or whatever. There's some stocks just have been doing terribly. So that's not where we lie. We try and follow the stocks that are going up most of the time. Okay, so now we've looked at that. Let's go to the overseas markets, and we can see what the Dow's been doing. Although it has tempered its fall a little bit. We've got the last couple of weeks that have been going steady. As it has this week. I think we were down a bit last night, but generally steady. We'll have more to come yet. There's plenty of selling up here in the Dow. It looks like the pressure might be down there at the moment. Without having, the trapdoor has just gone ajar. It hasn't opened completely, but it's come ajar, and we've just got to be a little bit careful it doesn't fall through too suddenly. If we look at the S&P and the Nasdaq, they're not quite as bad. The volume's not quite as evident. There's a bit of volume there, and we've had a bit of a shutdown here, but still, it's a fairly calm correction so far, which is what we'd like to see. But it may well come back to the support area, which would be quite a natural thing for it to happen in the scheme of the big uptrend that we've seen. Okay, so we tend to focus on these little bits of down rather than the up. So we get lots of up, we get a little bit of down, and we start panicking. Well, we don't really need to. It's just what happens. So the Nasdaq, similar thing. Although it has come off a high, which is probably a little bit more significant, we've seen some fairly good selling here. So some of those techie stops might be getting a bit frothy at the moment. We might see a couple come back, although I know Google last night, I think, reported some pretty good figures after the market. So, it's a stock-specific situation there, but this Nasdaq is obviously dominated by very few stocks, and we've got to watch those big stocks if we want to know this Nasdaq's going at the moment. So that's the Nasdaq. It's come off a little bit. The S&P, ASX 200, has come off. Nothing really of concern. We've seen these drops before, and they come back. We really just be a bit patient on this one. And, let this correction play out if it's going to play out, and not be trying to make things happen that aren't happening, or trying to think things are going to happen when they haven't happened. So just a matter of standing still, keeping an eye on things, and just reacting when you need to. Okay, so that's the ASX 200, no big deal there. And if we go to the commodities markets, gold, as you can see, had that pullback there off that big top of that range there we hit. We'll have to wait and see, but there's been some pretty hefty buying here and not a lot of selling as yet, so we're not too concerned about that. Gold seems to be going higher. Copper as well is also going higher. It's holding quite well, that break there, so it's certainly got a mission to get back to R2, which would mean a cleaning out of this area here, which is a bit of a congestion phase, which has stopped it previously, but this time we're having a more serious attempt to get higher, and we see a bit of news on BHP last week, or last night, about Anglo American. Looks like they might be ramping up their copper operation. So that's a good sign. So they have been shrinking to greatness. They're now perhaps expanding to greatness again. Maybe it's just the way the cycle goes, but that's what's happening there. So copper, Brent crude has really done nothing, and we're a bit surprised about this with what's going on in this world. Brent crude has really done very little at all, so we can't get too excited. I am looking at a couple of energy charts at the moment, which look very interesting, and I might cover those in the newsletter sometime soon. I'll just note that down, I think, because some of them are looking quite interesting, despite the oil price not having done much at all. Okay, so that's the overseas stocks. We can get in down and get some ASX stocks now. Okay, first you go to a momentum stock here, which is a little pharmaceutical company, which is broken into the ASX 200, or it's broken into our stock groupings anyway. Having a fairly swift rise to fortunes here, rise to fame, I should say. It's rating at 10. It's broken through this high here, new high momentum trade for us. We don't look back, we don't look forward, we just look at what we've got. We've got a little break here, so we've followed this break, we've followed it higher. Volume's been good, momentum's good, so we'll just raise our stop on this one here. And it'll come back at some stage, but hopefully we can generate a bit of profit out of it. A little momentum trade for us to have a go at. Okay, ANZ, so we've got a bit of a mixed bunch for you today. ANZ has been an interesting stock. I think you know that I've been in the other three stocks for a while, but ANZ not really. The only reason, some of these you think they're going to be the same, but they're not all the same. And ANZ has this big resistance level up here that's been there for probably 1, 2, 3, 4, 5 years. That's a big area to it's a big resistance area to hold the price down. So while we're below it, while we're below it, the market can still fall. It can still come back to this S1 level. We have basically a slow uptrend from the lows here, which is a good sign. So inevitably, we're looking for this to break. It's a bit like the Telex chart you just saw a minute ago, the high there and the angled up of the buying. So eventually here, if we do get a break here, we'll be quite happy about it, because it is a 5-year trend, a 5-year sort of resistance level that would break, and that's pretty significant for ANZ. And ANZ's probably looked at as, it's in a pretty good space, I think, at the moment. There's nothing too concerned, and the market's going higher here. It's had a nice little break up here, shot to the highs here. So at the moment here, we haven't broken here, so no break, no trade, so we hold off for now. But a break above there was a very interesting situation, I think. It is neutral rating at the moment, ANZ, so it can be, it's ready to go. The trend intensity indicator. We've got a little bit of buying here which started to appear. This has been positive for a while. It's above the average. It's just the price action we need to confirm the break, which is up around here, around about $29.80, $30. Okay, so that's ANZ, looking interesting, and a little bit different to the other banks. ALS is ALQ, ALS, whichever you want to call it, code ALQ, name ALS. It's been performing quite well, struggling to get out of this range though that we've got at the moment. So we're watching this pretty carefully, because we like these ranges. We don't like them when we're in there, but we like them when they break out, because when they break out, they usually suggest a move higher. So here we've had a fairly sharp move towards the high here, and it failed again. This high goes back a lot of years, but it's more significant just what we're seeing here. That's why I've got the all-time highs back there. But you can see here this rally's been quite strong, but it has bumped into here and pranged into it, and it hasn't got through it. So the power's not there yet. We probably want to see a little bit more volume. The volume is certainly mixed on this one, and always is usually. This is positive momentum, so is the average. So we've got a bias here. Our trend intensity rating is 0. It's really a matter of, like ANZ, just waiting for this level to break. and we'll keep an eye on that for you in the trading centre. But for the moment, it hasn't broken, and it may not. Maybe the corrections just pulled it off its highs, same with ANZ. But when the corrections might be over, we might be going through. So it looks an interesting chart and certainly worth watching. ALS Limited. Okay, we looked at one stock last week called Whitehaven Coal, which is a fascinating story for everybody because coal's the dead thing in the world, but Whitehaven had a huge run there, but it's now come back, a little downtrend, a little bit of accumulation. The next stage we'll look for is the uptrend stage. So it's looking interesting again. Everything's turned neutral here. A little bit of interest developing in this little rally here. The momentum index is neutral, and it's just flying around the average. So that's all pretty neutral there, pretty well. So trend intensity rating is actually -1. So we're just really looking at this break here. This is up around 812, 816. To move to there, it may not go. I think what we've seen last week in the pullback here is really just really confirming this level as the level to watch. It may come back and have another go and fail again, we don't know, but it's certainly, if it does break through there, the probabilities are going to be that the price is going to move higher. And that's what we're doing all the time, just trying to work out the probabilities of a stock going one way or the other. At the moment, the probabilities are probably 50-50 while it stays in that range, but above R1, they get more positive. So that's what we look for, and again, we're not too concerned about what business they're in, we're just concerned about the price action. Okay, so that's Whitehaven Coal. Just talk a little bit about Wesfarmers, interesting, and I've talked about, we took some stocks off the table this week with profit taking, and I'm going to show you the stop and everything here on this trade here for Wesfarmers. We've got our downtrend here, had our accumulation, and we had our break up. So we'll focus on that area there pretty well. Had our break ups, had our initial stop down here from the break above here. And then as it rallied higher, we then allowed to put our stop up here, and then eventually it's now get up to around about here. We've tightened it up quite a bit because we are at some reasonable resistance level here. At an old high there, and it's got through and it's come back, and it's just sort of sourcing around to come back, touch the stop. So we're really just in this situation where we're just waiting to see what happens to stock. We've got to try, the stop's got to be there to allow the market to breathe, but also to protect the profit. So we're here protecting this gain that we've got from here, but we're also trying to allow enough room for the stock to hold and rally higher if it wants to. However, if it doesn't and we do get stopped out, we can always buy a new high if it does happen. So that's our sort of our get out clause really. But for the moment, we're just watching Wesfarmers, and I guess the thing is now it can go up from here. It can come down, obviously, but we can also, if the stop goes off, what we do is we reduce risk, we take our profit and stand aside. And so that's what the idea of this stop is here. It's pretty tight at the moment, but that's where we put them when these situations arise. It's common sense and it's probabilities, which is always the prevailing thing that goes through all the work that I do, is trying to work out these points and what the odds are of this all that happening. So we've got some good volume here, which drove it up here. There's not a lot of selling at the moment. Bit of a one bar wonder here, but not really over yet. So it hasn't really been hit by the correction. So it could be very strong, and it could just rally from here up from here and keep going higher. But this is the way we trade. We can protect our positions, and we can always re-enter on a new high if we need to. Trend intensity rating is still at 9 for Wesfarmers, so that's pretty good. So that's Wesfarmers, and that's where we are thinking with Wesfarmers at the moment. Okay, the other stocks we looked at, well, Orica, which I mentioned briefly in the top 10. You can see here the big trend reversal pattern here. Sellers resist, buyers pressing, kicking up, and eventually this breaks here. ALS hasn't done it yet, ANZ hasn't done it yet, but Orica has, and it's gone ahead quite nicely since then. And it's sort of made a new high this week. I don't know what it's going to do today, but one day doesn't make a market. But generally, this is good because we've got very good angle on this moving average. We've got very good volume on the break. We've got a good momentum. So there's a very good chance that this stock is going to go higher. We just set our stop, and our stop is where we protect ourselves. So that's really it with Orica. It looks pretty good. And it's been the first time for a while, so it's come down from a fairly high level here. So there's probably some pretty good potential for Orica, and it seems to be getting things right, or the market seems to be liking it once again. Okay, my final stock I'm going to go through is GrainCorp, which is outside my remit normally. I just find it an interesting stock. It's a very, very simple pattern, and I try and show you these sorts of patterns so you can see how I work and why I make these decisions on my website, so you get a bit of confidence in what I do. and then you can follow some of the things that I recommend. Okay, so here we've got GrainCorp. It's had a down, it's had an accumulate, and now are we getting the up phase? Well, it looks like it because we've got a couple of higher lows here. We're now getting a higher high here, which is a trend reversal. Okay, we can see the volume patterns down here are good, and the momentum is positive, and this is it's above the average. So trend intensity rating isn't at a maximum yet, but it is a trend intensity rate which is in the strongly trending zone, meaning the trending attributes are very strong on GrainCorp. So it's just a little stock. There are many stocks. Also yields pretty well. It's an interesting stock, so maybe one that you might want to watch because it's just started to go here. And I guess ultimately this is probably what we're looking for: 1070, somewhere up around there anyway. Okay, so that's GrainCorp. So these are the stocks I want to go through today. I want to talk about the old highs, which is where the ASX is at, Westfarm is at. There are lots of stocks out there. Highs are emotionally charged areas where you can see a break up, we can see a break down, and we're looking to try and wonder which way it is going to go. On the upside you've got exuberance, and the downside you've got deflation. It's sort of like the switch between two big emotions can force the price quickly in either direction. So the purpose of our stops is to try and protect and be exposed. So protect our position, but also be exposed to the upside. So it's a bit of a balance trying to find that, but that's really what we're trying to do around the old highs, because they are key points where you can really get a good move and really if we're on the right side of it and it is up, and we've seen some good upward moves. Telex might be one that's doing it now. Orica may do it, but they're broken highs and they're really looking good. So you follow those ones because some of those ones are going to be big winners, and you don't know which ones they are, unfortunately, but they will be. So, as I said, if our stop does go off at Westfarm as the market goes back up, we can always re-enter on a new high. So that's how we sort of maintain our trend positions in all our stocks. Okay, now what's happening at Stockradar? Well, first, you can remember you can subscribe to our free blog, which I'm contributing quite a bit at the moment. You can also take a free trial of Stockradar for a couple of weeks and see how I work. I've got the newsletter coming out next week. The focus is on the utility stocks, things like Ampol and AGL. And APA, so that's in the micro V. But I'm also doing 3 special breakout stocks because there's not a lot of stocks we cover in utilities. So I'm doing 3 special stocks, which I quite like at the moment, which have been new entries recently. In Radar's rant, it's not the guessing that we need to; it's the knowing things that we have. Help us take control. The unknowing things that we don't know about, we can't control. So it's a bit about putting in place those knowing things that we do know and getting those set in stone. And then you can't control everything, but you can control certain things. So that's what I'm talking a little bit about there in Radar's rant. Stock of the week is Resurgent Reese. And our stock on alert is Ramlis Resources, which is living in the choppy world of gold, but is looking quite interesting on a long-term basis. So all those there for you to have a bit of a look at there. Now what I want to go to is just briefly a couple of slides on a bit about stops, and I've talked a little bit about them today, but just a couple of slides on when these corrections happen, we just can't panic. We've just got to relax and just let it happen because they happen all the time. And we just got to know how to deal with them. That's all it is. If we know how to deal with them, we'll be fine. So I'm just going to go through a rough idea of how I approach it. Firstly, I take a deep breath, I stay cool, and I respond as normal. I don't panic, I don't get anxious, I just let things happen, and I try and keep my emotional state fairly neutral. Corrections happen all the time. You can see them on the charts. They happen all the time, as rallies do. We don't like corrections because corrections can go back a long way, and we just don't know how far back, and that's a bit of the worry. But they happen all the time, and for the most part, they're minor. But are you prepared to do what is necessary in a market that corrects? Some stocks will be fine, some stocks will get taken out, and some of the stocks that will get taken out are your stocks, and you may not want them because you might have a big profit in there, or you might think there might be more profit in there, but you need to do what's necessary, and if a stock gets hit, you need to listen. Okay, so should I stay or should I go is really the option you have. Option 1 is if you hold, the benefit is you're exposed to the uptrend, and your risk is to your stop level. Okay. Option 2, when you exit, the benefit is then you lock in your profit and you turn neutral, and you've got no exposure, but you've got no exposure to a rising price. So they're the two things, the two options there that we have there. But we can't really worry too much about what's going to happen in the future. We just do what's happening right now. So either hold or exit. That's the choice, and you make a case on probabilities and trend behaviour. But that's what happens is there. The benefit exposed to an uptrend for the whole, the risk is to your stop. The benefit of an exit is you lock into your profit, but you've got no exposure to the rising price until maybe a new high happens. Okay, your predetermined stop is your decision maker. I've got all sorts of stops in the trading centre, big column stops, reversal points. They're the things that I look at every week for stocks that I'm holding, okay? Your predetermined stop, predetermined is the operative word there, not set now, not set in the market stage, not set when the market's moving, set when the market's closed. We're cool, calm and collected and thinking clearly, okay? Why predetermined? I just mentioned that decision should be based on fact, not emotion. Stops are set by your stop strategy, which is based on fact. So the predetermined stop is when you look at things and, okay, this is what I can see, this is what it is. So the fact of that matter is what you see and what you put down. Okay, you're not looking at a wishy-washy market going up and down, wondering what you should be doing. So should I stay or should I go? Now we know why we set a stop, objectivity. It makes it objective, okay? So the predetermined stop, this is why I set them every Friday. Reset them, set for the next Friday's closing price, okay? The decision will thus be made based on where your stop is and what your execute rules are. So my stops are based on Friday's close. If the price is below the stop, I will get out, I will execute the order on Monday morning, okay? As simple as that. I will buy entry. If I get an entry signal on Friday, I enter on Monday morning. So the market is actually closed when I'm setting my stops and when I'm making my decisions, okay? And that's a really helpful thing to me. Not saying it's important, it's not necessarily important, it's helpful to me and obviously helpful for a lot of people. I think if you're not making decisions when the market's open, it's an interesting thing. So in all these things, discipline is vital in these instances to what you do. I know I ram on about it, but it's important because you're not going to get there without it. Okay, so that's about all I've got for today. Last week we chose to lock in some profits and stand aside after some stocks had a heady run, which is a smart thing to do, I think. But some stocks we have let run, and that's what our trade plan dictates. Okay, so we don't really know what's going to happen. So as Clint Eastwood would say, you want a guarantee, you go and buy a toaster. Simple as that, okay? Not trade the markets. We simply try to get more right than wrong based on probabilities, which is what we try and do. So as I say, no guarantees, no toaster, but we try and do things based on probabilities. With us, a bit of profit taking after a strong run, especially in the builders and retailers, has been totally common sense at the moment, and some of our stops, predetermined stops, went off, so that's why we took them out. Okay, so when the common correction comes, stay cool, simply check your stops, that's all you really need to do. So watch your trends, heed your stops, stay safe, and I'll see you all next week, and I hope you have a good positive week. Okay, bye now.